There was this headline by Minister Koh Poh Kun, which reads, CPF Life gives monthly payout much like rental income from properties. Now obviously, in that whole dialogue, he was highlighting the good things about CPF Life and promoted the benefits of it. I actually thought the comment was okay, but I've actually seen some who mentioned that the comparison is dangerous. So you may have seen those comments going around, and today let's analyze them. Hi guys, welcome back to today's discussion. I'll break down into two key segments, which is firstly, the key advantage of CPF Life, and secondly, where property investment is probably better than CPF Life. So let's start with CPF Life and what was mentioned. You know, for CPF Life currently, with full retirement sum of 213,000, you actually get 1,730 for males. For ladies, it's slightly lesser, naturally due to the longer lifespan. Then for ERS, it's at 3,330 per month of cash flow from CPF. By the way, if you look closely, you scrutinize it, you realize that it's not exactly 2 times that of full retirement sum, correct? So actually previously in my finance summit, one of the attendees actually shared that that's because of the extra interest on the first 60,000 of CPF. That's why 2 times 1,730 is not 3,330. Get it? And by the way, we're doing right now a new finance summit for 2026. Inside it, I'll be highlighting the newest changes in CPF and also give you investment updates, especially on how to invest successfully. We've been on the bull market for the longest period, and you may have questions. Josh, what are your recommendations for allocations? I'll share with you in this summit. If I'm underinvested, how should I approach the markets? I'll also be addressing them. So look for links below to sign up for the early bird tickets. I'll be hosting in SMU again, and for the last 2 sessions, we have it fully packed, and it's a fully educational summit. The auditorium has limited seats, so look for links below before tickets are sold out. Now back to the point of what Minister Koh has mentioned. He said that CPF Life payouts, whether it's 1,730 for full retirement sum or 3,330 for enhanced retirement sum, is not taxable. That's actually true, but actually this tax merely impacts the net rate of return, correct? So on this point, it's not clear whether CPF Life or property investment is better. It's hard to say. And in addition, if you are retired, which means no active income, you're also not paying much taxes anyway. So with property rent income coming in at 3,000-4,000 per month, that actually doesn't move you very high up the tax bracket also. By the way, to this point, Singapore financial assets like stocks or bonds, they are tax-free. So for dividend income you receive when you buy Singapore shares, absolutely no taxes, and maybe that's where it shines best. And that's also why you should always build some dividend income. Now with that clear, let's move on to the main benefit of what CPF Life exactly provides that no other asset or no other investment can do, which is its consistent cash flow is not dependent on the economy. In your retirement years, you will face some recessions. 2020, there was COVID. 2008, there was global financial crisis. Every once in a while, something major will strike, which will cause dividend income to drop, which will cause interest income to drop, which will also cause rent income to drop. Look at this rent income chart index over here for Singapore residential condos. You realize that rent has indeed surged up after COVID, right? By about 40%. If you think back, a couple of years ago, there was so much displeasure when rent rates go up. A lot of people who were renting were complaining. And even for my HDB flat, when I was renting out, the rent was $2,000 and easily I could mark it at $3,000. Again, that's for a 3-room HDB flat only. But rent increment is not always like that also. If you see the rental index, you realize that it was stuck for many years, correct? From 2010 to 2020, not much of rent increment. And it's mainly due to supply and demand balance. 2008, 2009, even worse. There was global financial crisis where I guess the demand from expats dropped and rent actually dropped from global financial crisis. So these are periods where CPF Life's consistent income is priceless. So from this point, you realize that it's always good to have CPF Life, correct? In fact, for annuity income, it's roughly the same, a consistent stream with certain level of guarantees. And to this point of rent income dropping, by the way, it's not even the worst. If you think about it, the worst, if you are a property investor, is when you can't find tenant, correct? Zero rent because your property is vacant. You ask property agent to find tenant, cannot find the right tenant, or the price is just too low. Is that going to happen? I have some data points to drive home the point. Take a look at this chart over here. you realize that vacancy rates for completed private residential properties are a real problem. As of end of second quarter 2025, Core Central Region 10.7% vacancy rate, RCR 7.2%, only OCR 5.6% vacancy rate. Why is CCR the highest vacancy rate? My guess is because it mainly attracts expats. Locals are not going to rent in Marina Bay or Tanjong Pagar. There are no primary schools over there. Which means also, with certain work from home flexibility, an expat could choose East Coast Park, where you can take a bike across rather than renting in Tanjong Pagar. And that wasn't the case also if you think back 20 years ago. So don't be too sure on any investments, including properties. This entire data highlights something. Finding a tenant cannot be taken as a given, which means if your entire retirement income stream is dependent on rent income, there is risk that in some months there is nothing, there is no rent income. So as always, diversify asset classes, appreciate the benefit of CPF Life. Coming to here, if you learned something already, help me smash the like button so I can reach a bigger audience together. Thank you very much, and let's move on next to the second part, which is where property investment is clearly better than CPF Life. If you have been a fan of the channel, you do know I'm not a very big bull on residential property prices, although I own quite a bit of PropNex shares. I think we are now in a high cycle, and I'll explain why with more data points, so stay tuned right at the very end. But if you ask me for a 20, 30-year time horizon, I'm also voting that property investment is likely better than CPF Life from many angles. And the first thing quite clearly is liquidity. Don't get it wrong, properties are quite illiquid. They are not like stocks or bonds, financial assets whereby you can go to the market and sell immediately. But if you have a 6-month time frame, selling a property is still possible. On the other hand, any amount in CPF Life, you cannot cash it out, by the way. If you want monies from properties, you may not even need to sell. There are other methods. You can, for example, take a reverse mortgage or lease sell back, which is to simply sell some lease back and get income streams. Or you can even take a term equity loan if you own a private property. These are methods you can cash some out from your property without selling it even. But for CPF Life, make no mistake, there is no liquidity. You don't control the money anyway already. Once it goes in, you cannot say, hey, CPF, I want to take out 100,000 because I want to buy a new car. I want to take out 100,000 because my son is getting married. You cannot take it out, full stop. That's why also, when you pump monies into CPF Life, you must be okay that it's totally illiquid because it goes into the annuity pool, correct? You cannot suka just take out monies from there. Hence how I always recommend the private clients is dependent on how much spare assets they have. Whether to pump to ERS or not depends a lot on that, so don't pump in blindly. I've actually this previous video, which I also leave towards the end of this. I have this private client with more than $1 million in his CPF OA. And then in this situation, quite clearly, pumping towards ERS is a no-brainer. But for another family who has less spare cash, my recommendation could change also. So it depends on case to case, and as always, if you like a fee-based advisory work, look for my links below. I can help build a clarity to your retirement plan and help you with your investment decision making. And to this point of cashing out, at least an annuity plan which gives you consistent income stream still allows you to cash out from a policy or take a policy loan if you really need. So again, comparing them, CPF Life, illiquid, but if you live very long, pays very, very well in rate of return. Annuity plan pays less in cash flow, but you still have some liquidity through policy loan or surrender value. And also it has death benefit, which ties into the second point of why properties could be better than CPF Life, which is legacy. You do know, right? When you pass away, if your property still have lease at least, you're going to leave behind your home, you're going to leave behind your investment properties to your beneficiaries. Same with all financial assets, same with your bank account, same with annuity plans, etc, etc. But for CPF Life, do note if you are past the age of 85, there's probably nothing left for the family. Yes, we have 3 plans, basic, standard, and escalating, which pays out monthly benefits in different structure. By the way, since you're on this topic, escalating means you get less at the start and pays you more, 2% more every year. Standard is the default, fixed payout. And basic, you get less, but you retain it in your RA account. And if it sits there with certain value, that could still be passed to the family. But again, for all 3 plans, especially after the age of 85, you realize that there's more or less no more bequest amount, no more residual that you leave behind for family. That's the nature of CPF Life and the annuity pool. And just to clarify, your MediSave, of course, if you still have balance, will still be part of your estate, but just not the CPF Life after the age of 85. If you have questions on this point, leave in the comment sections. I also leave in the comments maybe some other tutorials that you can follow on to learn a bit more on which CPF Life plan to choose. How about that? So if that cleared, let's move on to the third point of when properties are better in CPF Life is in this glaring area, which is potential gains. CPF Life, there is no upside, but property investment, if you get it right, there's possibly big amounts, $1 million gains. While I'm not a property bull, I must acknowledge that if you get it right, the gains can be big. By the way, just with any investments, I've seen people mention, oh, I cannot put $2 million in the financial markets. I cannot put it in property. Not true. I have $2 million in the financial assets and they are also substantial, 100 over 1,000 gains. And back to the point of property gains. Let me share with you what are the best performance for 2025. And this name actually came up. 100 Palms, which is in Yio Chu Kang. So why is 100 Palms so good? Firstly, it is an EC. By the way, EC's BTOs is 包价. Very seldom do I see losses in these situations. Send me your case study if you have been in losses buying a BTO or EC. It's usually in the resale market or in the private property market that there are losses. It is true. And later I'll show you some data. And back to 100 Palms, it was first launched in 2016, just after the bear market of 3 years, from 2013 to 2015. And that explains why it's done so well. So before we get too carried away, let me show you the flip side, which is when it doesn't do very well. So we have a balanced point of view. Most of the time, a healthy balance is important because if you go to a showroom, you only see rosy data. That's why I've taken time to dig up these. Take a look at this over here. You see there's an increasing amount of loss-making deals in third quarter 2025. How many families have lost money in their residential property? 3.8% of all resale transactions. 3.8%. That's not small. That's not 0.38% whereby, you're so unlucky. It's not. It's 1 in 25 if you think about it. And these losses, they don't even include stamp duties, interest costs, agent costs, etc., etc. And of course, opportunity costs if you simply just didn't do anything and just keep the money in CPF OA. So the actual loss numbers could be even higher than 3.8%. And each of these losses, I would think, is also few 100,000. But wait, aren't we in good times in the residential property markets right now? Still can get losses, right? But what about bad times? Is it going to be a bit worse? To answer that question, let's simply look to the left-hand side of this graph and you'll see something far worse. Look before COVID, because COVID is just a one-off event. Look before COVID 2019, you realize 19-20% of resale transactions were in losses there. 19-20%. I bet you weren't expecting that. There was 1 in 5 who have lost big monies in properties. Yes, it is true that if you hold very long term, properties will likely make you money, which reinforces when you buy any property, you must have the holding power. I would think the majority of this 19-20% have faced situations which compromise their holding power and that's why they have to exit at a loss. Food for thought, hopefully I've given a very well-rounded discussion on today's topic whether CPF Life is better or property investment is better. In conclusion, maybe I can share also. I think CPF Life as a first layer of guarantee, that's what I'll do for myself. And it's probably the best at delivering that value. Cash flow streams, rain or shine, regardless of economic condition. Then beyond that, it's not whether it's better than the rest, because quite clearly it has limitations also. To grow wealth, I still believe it's better investing. In the long term, being an investor is still going to far exceed being a saver. Links below, reach me on a fee-based advisory work, as well as the Georgetown Finance Summit. Check them out. Hope to see you there, and I'll sign off from here. Take care as always. Goodbye.